Hi, I'm Courtney James, and welcome to Mining Minute with Acuity Advisory Corp. It's my pleasure to introduce Dave Kranzler, a hedge fund manager, precious metals analyst, and author of the biweekly subscription newsletter, The Mining Stock Journal. With years of trading expertise built up on Wall Street, Dave now co-manages a Denver-based precious metals and mining stock investment fund. His passions lie in helping people understand the truth of our financial system and economy. Dave's unique perspective and in-depth analysis of the precious metals and mining stock markets have made him a sought-after expert in the industry. Dave, thank you so much for chatting with us today.
Courtney, thanks for having me on. You make me sound a lot better than I really am.
No, we really appreciate it. So I'm just hoping, I know I gave a bit of an introduction, but I was wondering if you could give us just a little background on you and your experience specifically in this industry.
Sure. So I came out of college in 1985 and went to New York, worked on Wall Street for 4 years, then went to business school, came back out and traded junk bonds for 9 years at Bankers Trust, and decided when the tech bubble was blowing up that it was time to move back to Denver, where I'm from. And I just started kind of doing my own thing, trading and managing my stock accounts. And that's how I jumped into the precious metal sector in, I think it was mid 2000, roughly
Wow.
2001.
Okay.
So, and that's pretty much been my passion since then.
Wow. So you've been in it for quite a while now.
Yeah, unfortunately, just means I'm old.
That kind of brings me to my first question here. I know over the past month, we've been seeing a lot of action around precious metals, specifically gold. What are your thoughts on the recent surge in the price of gold, and how do you see this trend impacting the global economy in the short term?
Sure. I don't know if the rising price in gold and silver, let's not leave silver out. It's had
It's
a
true,
good
yeah.
performance the last probably 6 to 8 weeks, maybe even a little bit longer. I think it's more important to look at the reasons why gold and silver are moving higher. I mean, really, gold and silver are their money. So currency, world's oldest money, right? World's oldest form of currency. So I think a big part of the reason that gold and silver, particularly gold, is moving higher is you're starting to see a movement, particularly with the Eastern Hemisphere bloc countries and some of the South American countries, to move away from using the dollar as a reserve currency. And as part of that, a lot of the central banks in a lot of these countries have been buying a massive quantity of gold for more than a year now. I mean, they've been buying a lot of gold all along, especially obviously China and Russia. But there's been several more countries that have gotten involved. And in 2022, a record amount of gold, this is physical gold, not GLD or gold, other forms of gold derivatives. This is physical gold. And a lot of it is repatriated back to the countries for their own safekeeping in their central bank vaults. A record amount, I guess the records go back to the mid 50s, and a record amount of gold was purchased by these. And then, when you read the articles, it just says central banks, and specifically it's the Eastern Hemisphere central banks, not the Western central banks. And they've continued buying at a record pace in the first quarter of 2023. And so I think that's a big part of what's pushed the prices of gold and silver higher. And also to the extent that fiat currency devaluation, or there has been a lot of it really since 2008 and especially since 2020. I think the price of gold is starting to reflect more accurately the amount of fiat currency devaluation from money printing that's gone on. So I suppose if it's going to affect, I mean, it will have the movement away from the US dollar, and it's going to take, I'm not trying to suggest it's happening overnight or it's going to, completely happen this year, but it's happening, and it started to the rate of it started to increase after the U.S. froze Russia's Western assets and that were being held in Western central banks,
Okay.
and so that will have a profound effect on the global economy. It's going to ultimately it'll move, in my opinion, a lot of the global wealth out of the West and into the East.
And is that because of a lack of trust of these Eastern countries in their money being invested in American banks?
I think that's part of it, and I also think that the planners. I mean, this has been in the planning process for a long time, and I think the planners who are starting to put their plans into motion, I think they're kind of looking at the major Western governments and their currencies and saying, they've been completely, well, not completely, but they're being devalued from money printing, and all of these governments are just taking on enormous amounts of debt. And it's not just the governments, it's also the population, especially in the United States. So I think they're just saying, we can't, not only can we not necessarily trust the general policies of the United States as they're being implemented globally, but we can't trust their currency any longer. So, and it's not something that could happen all at once, because like China's been reducing its investment in U.S. treasuries for quite some time, and it looks like the rate of divestment has picked up pace. So, and I think it's gonna continue, and I think that the pace of divestment and use of the dollar is going to increase going forward. I should say that
Um,
the decrease in the use of the dollar and the divestment of dollar assets.
right. Okay. And this ties into the next question here, where a lot of analysts believe that gold prices tend to rise during these periods of economic uncertainty. Do you agree with this assessment? And how do you think that the current state of the global economy will impact the price of gold as we continue to move forward in this direction?
Sure. I mean, I agree with that statement. Certainly, economic and geopolitical uncertainty drives capital into gold as a flight to safety. And I also think that those entities and wealthy individuals and even non-wealthy individuals who are accumulating gold and silver, physical gold and silver right now, are again they see that fiat currencies are being devalued by monetary printing, money printing,
Right.
currency printing by central banks. And it's not just the Western central banks, but I mean, the worst offender obviously has been the Fed. And that's, I mean, over long periods of time, and I'm not talking about, years and decades, I'm talking about centuries. Gold has been an effective wealth preservation asset, and that's really its primary purpose.
Okay. Um, well, yeah, so what strategies do you recommend that investors looking to profit from this current run in gold prices do? And how do you see the trend continue to evolve over the next few years?
So my view on gold and really on silver in general is that it should be looked at as a wealth preservation asset, not necessarily a total rate of return investment per se.
Right,
However, I also am of the opinion that the current prices in all currencies of gold and silver are intrinsically undervalued versus where I think they should be trading. And there's all kinds of different metrics you can use to measure that. I used to look at the gold oil ratio all the time, but if you just look at the ratio of the amount of physical gold above ground versus the amount of sovereign debt globally, or the amount or the money supply globally, gold has not appreciated in value as much as money supplies have grown for
right.
major industrial countries. So I do think there's a total rate of return investment opportunity for gold and silver. And, so the way that I would recommend investing in the sector is first and foremost buy physical gold and silver in bullion form, sovereign minted coins, or you can also buy, there's sovereign minted bars, or just standard gold and silver bars, and safe keep those yourself.
Right.
And then if you want to try and leverage your returns on gold and silver, you can trade around ETFs like GLD and SLV, and buy call options on them. And then I think the best total rate of return way to play an outlook in which you think gold and silver are going higher is to buy the mining stocks.
Okay.
Because those offer a highly leveraged play on the price of gold and silver.
And speaking of mining stocks, are there any ones that you have your eye on in particular at the moment?
I focus primarily on the junior development stocks, the juniors, the so-called ones, but even more so than that, the ones that are in early stage project development, and those are the riskiest. They also
Right.
offer the best returns. And in that space, there's a stock that I particularly like. It's called Viva Gold, and they're advancing a high-grade open pit heap leachable project in Tonopah, Nevada. So it's got a relatively safe mining jurisdiction, and I think it's probably maybe 18 to 24 months away from either having an operational mine or will have been acquired by then. There's a lot of big companies that operate in that area that might want their access to their gold deposit. So that's one of them. In terms of producing kind of mid-cap mining companies, I like Fortuna Silver. And I've followed that for quite some time, and I know management well. And based on how much gold I think they'll be producing by the end of this year on an annualized basis, I think the stock's probably 30 to 50% undervalued. So, yeah.
Fascinating. And so for investors that are looking to get into the small to mid cap space, what are some things that they should be looking for in companies to help mitigate risk?
Boy, that's a good question. My first thing that I look at is, the jurisdiction. So a company has a new project that they've started advancing. I tend to try and stay away from companies where there hasn't been any kind of advancement or any kind of work that's been done to indicate whether or not there's the potential of a deposit on the property. But sometimes I invest in those. But look at jurisdiction, look at management, look at their track record, how much the equity is management invested in. That's a very important one for me. And I like to see companies with development properties developing in areas where there's actually mines that are operating, or other projects that are far along in advancement, and look like they'll be converted into operating mines. So because there's a lot of risks involved in the fact that there's operating mines in the area where a company's looking to advance a project, tells me that it can be done in that jurisdiction successfully.
Okay, amazing. And then for our watchers who are looking to follow your newsletter, what are some of the things that you talk about it? I know you release it on a biweekly basis, but just to give a tidbit of what to expect from it.
Sure. So I publish every other Thursday, so twice a month. And I have a portfolio of companies that I've developed and invested in over time since my newsletter started in 2016. And so my format is I give sort of general market analysis and maybe why I think gold and silver are moving up or down, and why I think the trend could change. And then I go into company updates. So if there's been material news on any of my portfolio companies, I'll update that and, put out an updated investment recommendation, buy, hold, cut down on the size of your investment at this point, that type of thing. And then it's not every issue, but I'm constantly on the look for new investment ideas, new mining stock ideas. And I'll look at just about anything, even if it's in a risky jurisdiction, but I like to try and find companies that are not well followed yet and relatively unknown, because I think that's where, if you do your homework and you get lucky, I think that's where you can generate the most amount of alpha in the sector, is companies that are unknown, but you've concluded that eventually they'll become well known. So
And just for my curiosity, so you've been in the space for a while, you've invested in a lot of junior companies. What do you think is the success rate? Like, of course, there is a lot of risk for it, but if you had to take, your past history, what's the success rate for these junior companies succeeding or becoming a profitable investment?
wow, that's a great question. It's one that doesn't really get asked a lot or talked about a lot anymore. When I first started 22 years ago, it was generally kind of considered that maybe, out of 100 junior mining companies with new projects that are being advanced, your success rate was probably going to be less than 5%. So
Right.
if you spread your money out,
That 5% could hit.
some will may work out, may or may not. They might give out decent returns, but the ones that do work out will more than make up for the money that you lost on the dogs. But I think, and again, I haven't really chatted in depth with anyone, but I think the technology has improved so much over the last 20 years that it's a little bit less risky to develop a new project, because
Right.
there's all kinds of new technologies that are around now that can point geologists in the right direction as to where to stick drill holes when they're looking for a deposit. So,
So you're not, yeah.
but I would still say out of 10, let's say you have a portfolio of 10 companies, if two work out and become home runs, I think you're doing better than most people.
That's great. Yeah. No, that's awesome. So it's less fishing in the dark now because of the technology advancements, but it's still risky.
I believe that to be the case. I mean, there might be
Okay.
people who disagree with me, but I think that's correct.
Okay, awesome. Well, thank you so much for your insight on the market, your recommendations on some companies to keep an eye out for, and just your feedback on investing in gold in total. So, thank you for coming, Dave. And if you guys want to follow up on his newsletter, I will attach the link to it below. Yeah, thank you for listening in.